One of the reasons why the story-based pick of the month newsletter industry is a multi-billion-dollar industry is because they tap into the fear of humans. And the way they tap into the fear of humans is by using stories and using what the top fear of the day is. So one of the top fears right now that's going around all the news shows, and I should use quotes around the word news because it's really opinion shows. Is there really news anymore? Is kind of the North Korea, are they going to push the button? Is Trump going to push the button? Which way are the nuclear bombs going to fly first? And, there's not much to talk about, so they're talking about that. So I can almost guarantee you, that the billion-dollar story-based pick of the month newsletter industry right now is getting their top nonfiction writers, the highest paid nonfiction writers on the planet, getting ready to come out with some sort of promo called The War Machine. And The War Machine is going to be about the military-industrial complex and how Raytheon or Boeing or one of the other industrial military complex players' stock is going to skyrocket and make you a gazillionaire. And they'll probably call it the War Machine, or they'll call it some sort of private back office secret conversation with some top military or Washington, D.C. person. But you can pretty much guess and guarantee that's coming. Hey everybody, this is RC Peck, and this is my weekend podcast. And I just want you guys to make sure that you're prepared for the onslaught, because I know most people subscribe to 1, 2, 10 story-based pick the month newsletters. And it's not just the service that you are going to hear from, it's their hourly promotions. You're getting promoted daily from them. And so the next thing that's probably going to come out is something probably around the War Machine. And it just reminded me of Eisenhower in his farewell speech when he talked about be aware of the military-industrial complex. So with that, what I want to do is is it true? Should we be concerned? Is South Korea about to get blown off the face of the earth? Is North Korea about to push the button? And if it is true, what I found is the price charts seem to tell us a lot more than any news channel can. So what I want to do is look at two specific price charts. And the first one is just to look at the Korean stock market index, the South Korean stock market index, because if any price chart is going to give us some insight into whether little Kim is going to push the button, it's going to be this price chart you're looking at right here. And when I look at this price chart, this is 10 years of data, what I see is I see a price chart about to break out to new lifetime highs. I see it moving up. I see it about to break out above its 2011 highs. I see a stock market. Again, let's set aside the news. Let's set aside the craziness and just look at the price chart, because on this price chart, you have tens of millions or hundreds of millions of people putting their money on the line. And what it's telling me is, I think everything's good, because if it wasn't, it's going to show up in this price chart. It's going to show up with people not putting that extra currency unit in the South Korean composite index, right? Now, the next thing you could be saying is, okay, RC, but maybe South Korea is not doing well against other emerging markets. And guys, whether Korea should be categorized as a developed market or an emerging market, from a stock market point of view, it's still considered an emerging market, partially because the currency is not that easy to kind of trade and liquidate between that and the euro and the dollar and the pound. And so it is still considered an emerging market. So then that means, well, I just want to look at an emerging market ETF, which EEM is the largest one in the United States. And just for fun, I wanted to see what EEM's top holdings were. And guess what? Its top holding is Samsung, which is basically South Korea, because South Korea is run by Samsung. So Samsung is the biggest position in the iShares MSCI Emerging Market ETF. And if you kind of look at this, you can see that EEM is not near hitting a new lifetime high yet. It's still about 10% away. But South Korean composite index is much closer to hitting a lifetime high. So South Korea is even either equaling emerging markets or it's outperforming emerging markets. So everything the price charts are telling us right now is that really CNN, Bloomberg, whatever news channels are calling themselves these days, really it's the North Korean thing, right? There's not anything else to talk about because guys, remember, there is no news anymore. It's just someone's opinion repeating someone else's opinion. At least that is my very jaded, cynical point of view. Okay, so what is the takeaway? Guys, the takeaway is you want stability, you want consistency, you want stableness, you want to avoid the next time the market drops 49% like in the dot-com crash or 58% like the global financial crisis. And you already know if you had a blended or balanced fund, you know that your balanced approach fell 40 to 45% in the global financial crisis, right? Because when really bad things are happening, all things get correlated and everyone gets scared. So even those blended or protected accounts fell 45%. Guys, 45% is really close to 50%, which is really close to losing half your money, which is really close to when you lose half, you have to double it. So how do you avoid those catastrophic losses? And the loss is just not in the 40 or 50 or 60% fall. It's in the 4, 5, or 6 years it takes to get back to break even. And that might have kind of been okay when you were 40 or 45 and you had 20 years of earnings runway in front of you. But when you're 60 and you've already experienced two 50% drops, and now you only have 5 years of earnings runway in front of you, or you're 65 and you have only 1 year of earnings runway in front of you, or you're 68 and you have negative 2 years of earnings runway in front of you, you want to avoid the catastrophic losses. And that means aligning your money with the market, not your opinion, not your morality, not the news channels, not the story-based pick of the month newsletter industry, not your big box advisors, which I know some of you trust and like your advisor, but they're greatly underperforming. It's about looking at the price because the price tells us what's going on. Stability, profitability, safe performance, safe acceleration, consistency. It's in the price and knowing what questions to ask about the price. And when you know those questions, there's actually 2 of them, then you start to get that stability and that security and that freedom that you want or you want back. So guys, it's not in the news. It's not in the hype. And I know you know this stuff, but our brains get hijacked. I want you to remember the highest paid nonfiction writers on the planet. Their stuff is not in Barnes & Noble. I understand Barnes & Noble is not going to be around much longer. Their stuff is not on Amazon. It is being offered to you hourly by the billion-dollar pick of the month newsletter industry. Those are the highest paid nonfiction writers on the planet. They are very good at what they do. If you go to their office, what you will see are shelves and shelves and shelves of psychology books. They know how to pry into your mind and scare the hell out of you. And guys, it's not in the business model. It's not in the big box business model. It's in the price chart. It's understanding how price charts work. Open up, turn on your visual cortex. Your human brain was designed to see pattern recognition visually. And when you do, great things happen. Stability happens, steadiness happens, consistency happens. Guys, thank you so much for being in my world. I really do appreciate it. I love connecting with you guys. Until next time, this is just another step in helping you protect your portfolio and your future. Take care, guys.